Hi everyone, welcome back to this week Weekly Market Update. So as usual, let's take a look at what's happening over the last Friday. There's things to watch out for the coming weeks and some certain counters to introduce you guys to watch list and then to monitor for the coming weeks as well. Some good opportunity would like to share on directly on the chart as well in the trading view later. So what's happening on last Friday? We can see the S&P closed little change on the Friday. Wall Street notched weekly gains once again. Out of the three indices, we can see that the best performance is actually fall under the Nasdaq. On a weekly basis, up 2.6%, while the other two a little bit shy off. So, of course, what is going through is that we know there's economy news announcement on last week, especially like PPI, Producer Price Index report, the sentiments of the market itself, of the inflation, where are we looking at right now, and also a lot of uncertainty from Trump due to the tariff that he's keep trying to plan more tariff on Europe side, on on China side. But I think things has been settled down, as you can see from what over here stated that things to have settled down. Uncertainty turn to be more clearer pictures of what is Trump is trying to do, and that is showing a sign that as long as uncertainty get rid of, market will continue to go higher and higher. And of course, we see that the 10 years treasuries yield continue to slide on Friday, and that is resulted that equity portfolio will turn positive. It's the inverse compared to the treasury yield. Alright, so that is what happening on last Friday itself, and for the coming week, do watch out. US is closed on Monday due to Washington birthday, the president birthday. So market is operating on 4 days next week, starting on Tuesday. Then we have FOMC meeting on Wednesday itself, and initial jobless claim on Thursday itself. Alright, on top of that, you guys can go and Google on the earning whisper. Alright, Google on earning whisper, we can see that for the coming week, there is one of the particular stocks that I want to mention that you can watch out and pay attention is actually to Alibaba Group. Alibaba Group is having their earnings report on the Thursday before market open. Why I mentioned Alibaba Group out of so many? Because Alibaba Group seems like having a good momentum for the past few weeks, has been trending higher and higher. A lot of good news, like they partner with Apple's, and Hang Seng Index is breaking the momentum of going trusting higher and higher as well. So for Hang Seng Index, if you're monitoring the chart, we are coming close to the resistance level. There might be some blockage over there, but if let's say we ever able to penetrate higher, there's a certain level we can monitor. But focus on Alibaba, this value trap company seems like it will be performing well. If let's say Thursday the earnings report come in even better, with good news of partnership with Apple, with good earnings report, we can see the breakthrough of Alibaba as compared to other shares as well. Of course, there's many other shares earnings report for the coming week. If you are holding any of them, do watch out. But I just want to pay attention on Alibaba on Thursday itself. Okay, so let's go directly to the chart. Alright, let's go directly to the chart. So this is Dow Jones. I think my last video was on 26 Jan. That's why I post what is happening on that. I think there's no write up here. I think I did mention it's the same thing. So to watch out at the point of time of 5th Jan, I believe I'm biased on the bullish on the divergence, so I'm biased on the upside, and then we can see that the market has been trending higher and higher. And right now, for all three indices, to watch out because we are actually at the top. Alright, at the previous top right now. So a lot of people is taking this opportunity, try to short because their stop loss is just 100 or 200 pips shine off from the recent high. They are trying to take a good risk reward to short it, but ultimately there is no sign for the market to retrace. Yes, there may be some drop back, perhaps, but after this drop back, they may bounce higher because there isn't any sign of it. And we are always encouraged to ride with the trend itself. So I would suggest that we wait for it to bounce back to maybe 43,350, the previous support. Then we look at this area to bounce it up where we are still trading in the parallel channel trend. We are looking at the lower boundary of the parallel channel to go higher. Alright, so that's my view on the Dow Jones Index. Same goes to S&P, same goes to Nasdaq. We bias on the upside, but do watch out certain things that they are always at a resistance level right now. So if you want to trade that because you think that a good support level, I mean a good level for you to cut off if you trade short, to watch out. Right now the momentum is still upward. Alright, the pressure is there, so be careful. If you want to go anti-trend, go with a smaller size. Alright, so next thing we look at Hang Seng Index. Hang Seng Index doing pretty good. I did mention I'm biased on the upside since January, right? Which I mentioned this is the moving average. Alright, the 200-day moving average. Let me just delete the right curve here. Alright, I'm biased on upside as you can see. Since 5th Jan, right, I mentioned 18K support is very important. 5th Jan is here, by the way, 5th Jan is this candle. So I say that 18K support is very important. If break below is not showing good sign. So 18K is at here. Well, the support, the price came near to 18,005, which is close on open at 18,009, and from there it go even higher. So this is the weekly chart. So we can see on the weekly chart basis, the candle actually break above the 200 days moving average, break above the 38.2%. We are now reaching to the resistance level which I mentioned at the 50% Fibonacci junctions, which is around 22,800. If it can go higher or break higher, then it will show a good sign. So in the round figure, we will look at a resistance level around 23,000 to 23,200. So we will be looking at 23,000, a round figure at 23,000 or 23,200, 200 buffer point. So on a day-to-day basis, we can take a look. So okay, so we just delete the whole chunk of stuff. Alright, so this is what we are looking at. Okay, so this is the price that we are looking at the resistance level. You may want to take note, we don't want it to break lower. So this point, there might be selling pressure coming in because right now at the RSI, we are actually have an overbought situation. And Hang Seng Index has been running upward thrust momentum since January 10th of January 2025. Has been running a solid for a month. Of course, it's a good news. Or we can say that Hang Seng has been beaten down badly since then, or heavily oversold. But do watch out on this resistance level. If you're able to break, you need to break these two levels, 23,000 and 23,200. Then trust above this parallel upper boundary. If you're able to break above, that is a good sign. But this breakout may be short-lived. We never know. Will there be any retracement? So for people who have not entered into Hang Seng, don't chase the market. Wait for the retracement. Then you buy back again just nice. This moving average come into play. So there is chance that Hang Seng will drop to 21,000 and another 2,000 point down if let's say suddenly Trump want to increase the tariff of 10% for China to 20%. There'll be higher chance for it to pull back, but let's wait for a pullback before we chase the market. Okay, so this actually gives the momentum for Alibaba as well. So for we take a look at certain counter today. So of course we look at Baba. Since we mentioned Baba, right? So take note for Baba, 15 Feb, Baba has broke above a strongly weekly chart. We can see that used to be a previous resistance, break above 200 days weekly chart moving average. So this break sign and close above is a very good sign. Of course, if you want to chase, there is possibility that it may reach 140 as a next resistance, followed by 160 as the next resistance. But I always don't like to chase the market. Right now, we can see that it's like an overbought situations. I always prefer for it to retrace back. You can use Fibonacci level if you want to. Always look for a Fibonacci retracement level at a well support well support the moving average, and then we enter again. So I don't like to chase. For my method, we can look for a retracement right now, but on the good side, I'm still biased upside bullish for Baba itself. Okay, so next we go for another counter. Just want to share with you on two counter. One is actually STZ. All right, uh, Constellations brand. I don't know how to pronounce it. It's STZ short forms. All right, this counter actually own alcohol like Corona. If you love to drink like wine, all right, a lot of alcohol over here. So this drop, all right, this drop is due to earnings does not meet the expectations. Resulted the huge drop, as you can see. All right, the earnings means the estimations, so resulted a huge drop. But the things to watch out why is in my radar right now, because Warren Buffett actually bought into these shares, and after market these shares actually spiked up, I think 6% up to 175, which is this around this area. All right, which is around this area. So if let's say you want to look into the weekly chart, if the candlestick next week is already up over here, meaning to say we can see some engulfing candle, and of course we need to pay attention to 180 because this level is the 61.8% Fibonacci retracement area. All right, so the price actually penetrate down this 50% and then penetrate down the 61.8% and go even lower. But if we're able to recover back by next week, so this is a way that we are looking for a bounce up. Not to forget, this is actually an uptrend. We can look at 200 days. It's just that there is some noise that break below 200 days, but it managed to recover previously. Right now, the noise break below the 200 days again. But if let's say Warren Buffett in place, the candlestick showing engulfing candle is a good risk reward to nimble a bit. Right now we are actually at the heavily oversold situation as well. So panic play might have been done so, because if you look at the shorter time frame on the daily chart, all right, on the daily chart we can see that the momentum, can you see? All right, this is the bullish momentum RSI. If let's say the market go even lower, the RSI should dip even lower, but it's a bullish divergence. So I am strongly biased on these stocks. STZ, we can do some dollar cost averagings, or we can pick up at a cheaper rate. If we break below 150, then it's not a good sign once again. Okay, it's not a good sign once again. I will do some write up, do the screenshot, share with you guys, share in the trading view. Alright, so before that I have actually done my own research. I think short-term support is at 170, which is around here, 170. Short-term support is 170 around here. Then the major support is the recent low, which is 160. Alright, 160. 160 is around here. Of course, this level, which is 150, is also the very, very crucial support. If you continue to break below, and it's very ugly for this counter. So if you want, right now the goose is a good risk reward, with a bullish divergence forming in the daily chart, you may consider to nimble a bit. Alright, so that is my view. Followed by today, the last counter I want to share is actually Palladium's commodities. So Palladium's commodities, I think it's this one if I'm not wrong. Let me see. Alright, okay, so for this Palladium, we can see that he has been dropping since February 2022, dropping crazily. We can see that how commodities performs in silver, in copper, all is breaking higher and higher. So right now, what caught me in this counter, this commodity counter, because it break below $1,000. I think $1,000 is a standard common price for these commodities. Second thing, when the price break below, the RSI seems like trending higher and higher. If you realize, right, it's trending higher and higher. This seems lower, lower, lower. So this arc actually bring my interest right now. And next thing, it seems like the price stay above the 50 days moving average. If you are looking at the daily chart, we can see that yes, it's a downtrend. all right, hitting the noise of 200-day and 50 days. Right now, it seems like there's a crisscross over here. The market seems like turning up. We can see that the price is well supported by 200 days and 50 days. All right, on top of that, RSI is ticking up. There's a divergence forming. So I think it's a good risk reward to buy on it. But if this commodity drop below 850, the previous support level, it is not a good sign, and it will negate this bullish setup. All right, you negate this bullish setup. So I'm biased on the upside for palladium. All right, so today that's my sharing. Hopefully you guys enjoyed. I will do some writing, do some screenshot for this counter, palladium STX as well. So we shall see where these two counter run for the next 2 weeks or next week, and then we'll review it again. All right, so that's all for this week winning market update. Just a short video, and I will see you guys next week once again. Goodbye.